Yeah, over to
Hi
you, sir.
everyone, welcome to all of you, please. With me, Ms. Gurmeet Kaur. I know Gurmeet since the start of my career. She started with, as a credit head with the AVCO, and she has worked with Fullerton and with Bajaj Finance, also very senior positions. And with other is my son Talin. Talin joined me in June, May 23. He is a graduate from Narsing Mohanji, and then he has just completed his MBA from ISB. I'll just give you a background to myself. I belong to a business family. My grandfather had a iron steel business in Lahore. Then the entire family migrated to India post partition, and majority of my family members are in business only. I've got my two sons. My eldest son has just graduated from Cornell in US, and both my sons have passed out from boarding school in Dehradun from Doon School. And my eldest son Pranav is working right now in US, and Talin is working with me. So I graduated. I did my CA in 90s, and in late 90s we started working for an American company, AFCO Financial Services. AFCO was one of the first US multinational to enter into India in retail finance. In fact, I think they're the first multinational to enter into India, retail finance. We started working with them as the direct selling agent. That is why where we met Gurmeet for the first time. Avco was a very well managed company, and we learned a lot of lessons, which we are replicating lessons learned at that time with Avco, which we are replicating in our company now. One of the most important lessons we learned, in running a finance company, is not to focus on the top line rather than on the bottom line. It's very easy to build a top line in NBFC, but major name of the game is the collection, not the disbursements. And I've got a very hard focus on the collection, and focusing on their PAT. The second lesson we learned from them, to manage your expenses really well. They were saying at that time, we count our pennies. Am I right, Gurmeet? It was same, or make our pennies count, something like that.
Yes, Sanjay.
You know, they used to be
Every rupee
institution every
counts.
single, huh?
Every rupee counts.
Yeah, every rupee counts. And third, very important lesson, we learn from them, you should look after your stakeholders, be it your employees, be it your sub-agents, or your investors. They really used to focus on their welfare, and you're having very good relationships for them. And I think when you look at the relationship with your stakeholders, money is on a scale of 0 to 5 is somewhere number 3. There are two more factors which are even more important, when you have a relationship with your stakeholders. And fourth, one very important lesson we learned from them is to take, you will, in any kind of business, you will continue to make mistakes, to rectify those corrective actions as soon as you identify any mistake, and take immediate remedial actions. So about our journey, we started with them as the DSA. Then currently now we are almost working with 40 banks as direct selling agents pan India. So we work for gold loans, loan against property, home loans, personal loans. In fact, we are the largest DSAs for gold loans pan India. We are currently working for gold loans with HDFC, ICICI, RBL, and recently we started with Muthoot also. In the month of September, we did 50 crores of plus disbursement in just the GL, besides the other products. In the year two, as a forward integration in the 2015, we took our own NBFC license, and in the same year, we got listed on Bombay Stock Exchange. Our current net worth is around 80 CR plus. In the year June 22, we tied up with an American company, RainPay. RainPay was one of the largest, earned wage access provider in US. So what happened is EVA product, we give dashboard to the corporate. First we tie up with the corporate and we give dashboard to them, and they put that employee data over there, and they fix the limits up to what extent employees can withdraw during the month. Let's say somebody's salary is 20,000 and the company fixes a limit of, let's say, 4,000. So employee can withdraw anytime during the month that 4,000 rupees, and the repayment comes from the employer. So employee, we do not take repayment, does not come to us from the employee. Employer deducts from his salary, let's say if salary is 20,000 and is borrowed 4,000 from us, so company will pay us the 4,000 and the balance 16,000 they will pay to the employee. So we started operations with them, Rain, in June 22, and same year in November 22, Rain invested in our company also, and along with then the Singapore-based fund NAV Capital. Unfortunately, in December, fortunately or unfortunately, in December they received a lot of equity in US. Rain received huge chunk of equity in US, and the new shareholder put up the condition that Rain should withdraw from all the countries other than US where they were working. I think they were working with us, and in India they were working with us, and a couple of other countries they were working, and they withdrew from all those countries. But since we had very good relation with them, Rain helped us, and my son had joined. By the time my son has also joined with me, we developed our own technology, and we hired our own tech team, and my son headed the tech team, and we developed our own technology platform. So currently we have almost tied up with, as of September 2025, we have already tied up with 145 corporates, and in September our disbursement crossed about 6 CR. So we are a dividend paying company for the since for the almost last 6 years now. Consistently, we have been paying, and I'm a profit making company since our inception in our listing 2015. Our current bankers are State Bank of India, and we have already regular audits have been company have been conducted, and we have cleared all those audits. RBI also conducted audit in year 24. So our system is quite robust. Our system can handle about 20,000 EVA transactions per second. I think there's a huge scope for ramping our operations. And we have given the guide. Our last year PAT was to about 1.37. Last year it was 2.57, and the first half year we almost touching, I think, 1.9, and it's almost touching 2. So we have been all our PAT has been doubling almost for the last 3 years, and we hope to keep that momentum in the coming years also. And I'd like to hand over to you guys, and most welcome with any questions, please.
Yeah, thank you, Sanjay sir. I will request participants to put the questions in the chat window, and we'll be taking those questions. Uh, so I will request Ganesh. So there are a couple of questions he has already prepared. So I will request Ganesh to put those questions. Over to you, Ganesh.
Yeah, thank you, Nityanand. So, am I audible?
Yeah, yeah.
Yes,
Yeah.
yes.
Uh, Sir, I have been researching your company, and I have listened to your con call and also read your annual report. Sir, in the latest con call, you have told that you'll be cross-selling to some EW customers, and some of the booking you'll be doing in your NBFC vertical. Just wanted to know, sir, an extension of this can be like some of the loans that are taken up or sourced by your DSA vertical. That also you can lend from NBFC, because I think you might be doing some data collection. You might be having granular visibility on the customer profile when you source a customer. So why not do that as well? Was my first question.
See, we can obviously do that. See, our currently, most of the, we are very conservative on that. Like, I've said earlier also, it's very easy to build top line, but, focus is, on our books only, verified customers. Mostly we are doing those customers with whom we have very long-term relationship, 15-20 साल का हमारा उनसे relationship है. तो हमने उनको जैसे किसी HDFC से ICICI से funding कराया हुआ है, and they have a good track record with them. Only we normally fund those clients in our own books. So
Okay.
new customers, we are a little hesitant, opening a business loan, giving a to new customers, sourced by other DSAs. We're slightly hesitant as of now.
I'm not just asking about the business loans, sir. For example, personal loans. Only on the customers who's, sir, do you do some data mining on the customers that you source from DSA vertical?
Yeah, yeah,
Uh,
of course.
and
Entire cases processed in our office only. Initial
yeah, so
checking is done in our office only.
So since you have a good visibility on the data and the financial data of these customers,
Uh-huh.
potential
Uh-huh.
customers, I think
Uh-huh.
maybe like since you told this, like some of the EWA cross-selling that you'll be doing, instead of booking it to your partner companies, you can book it in your NBFC. So I am taking this as a logical extension of that particular business strategy that you have taken up.
Yeah. That
So
of course we can do. Of course we can do. If we find some very good customer, and very creditworthy, of course we can take on our balance sheet also.
okay, sir. And sir, my second question was with respect to the DSA network itself. So
Uh-huh.
you have your employees as well sourcing loans, and you have a lot of sub DSAs under you who source loans. So what is the typical number of people who are there under you as a sub DSA and employees who do such activities? May I know?
In terms of the number of DSS, is almost
Yeah,
300
number
pan
of
India.
300. Okay.
Yeah.
And sir, typically these DSAs, I presume, would be coming to you because the kind of partnership that you have with so many banks and NBFCs. So that is the major pull, is my assumption, for these DSAs to sub DSAs to partner with you. Am I correct
Sure,
on this
sure,
aspect?
sure. See, I'll give you an example. Like in HDFC, we had 1.25% for gold loans. If a guy normally goes directly to the bank, he will not get more than 0.5. So because we do so much of business, we fall into the highest slab.
Understood.
So
So sir,
even if
my
an ex person goes directly to the HDFC Bank, one, they will have a lot of process in paneling them. It's a very tedious process. And HDFC will not give DSA chips to, or for that matter, ICICI Bank, to everyone. And it's a very difficult process to get corporate DSC for these banks. Plus, the payer structure is quite high vis-a-vis compared to others.
understood, sir.
Just
So
because.
how do we source these DSAs then? I mean, is there any acquisition strategy for
Yeah.
sourcing and retaining
We have our own website. They normally come through our website only.
Shub Bank, you mean?
Yeah,
Shubbank.com?
surebank.com. Yeah, I think you have studied
Okay.
the company quite well.
Yeah. Sir, I also had a corollary to this question. So
Mhm.
there are people like Andromeda, Finbird, for example. These are our competitors in this domain. Are they our competitors?
Yeah, absolutely. They are competitors, but none of the large DSAs are focusing on to gold loans. For them, it's a very small product.
Okay.
So
Okay,
neither
understood.
Andromeda or Rule Loans or Finways, they are focusing on gold loans. So we are working on the niche market, where there's less competition.
Okay. But we do more than gold loans, right, sir? I
Yeah,
mean, we
we
do
do all types
personal.
of loans. We do a personal loan.
Yeah.
In fact, we are the fifth largest for Fullerton. SFMG, we are the fifth largest pan India for them.
Okay, okay. For Fullerton.
For Fullerton. Now it's SFMG,
Okay.
no?
Yeah. Now it has been taken. Sir, coming to your EWA vertical, you had mentioned that typically the commission rate is between 1.5 to 2.5%.
Yeah.
Sir, what determines exactly, because 1.5 to 2.5% annualized makes up for a lot big difference between 1.5 to 2.5. So
Mhm.
what exactly determines the actual rate of commission that you charge to
See,
the
it's
Let me take this. Let me
yeah,
take
yeah,
this
yeah,
one because
yeah.
the pricing is all managed by us. So hi. So again, the range is from
high rate?
1.5 to 2%, right? So
Yeah.
the upper slab is 2, lower being 1.5. It primarily depends on a couple of factors. One, what is the attrition rate with the company? If the attrition rate is very high, that increases our risk. Thereby, we charge a higher rate. Two, how are the financials of the company looking like? So, and if it's a well-funded company, profitable, in that case, we typically go for a lower rate. Again, then we even do a what do you say, a credit check on the company itself, barring the financials, that how have they been with their creditors. So I think all these factors, primarily on the company side, determine the rate of fees that will be charged to the employees.
Okay,
Plus,
understood. So
plus discussion, what with the management also, that's also very important factor. Now, how much they want their employees to bear.
right, that also makes up
Uh,
a big chunk.
yeah, like we just
Sir,
had, we had
also I
just tied up
understand.
with, uh, pardon me.
Yeah, please go ahead. Sorry.
We just
Please go
partnered
ahead.
with a
Sorry.
partnered with one club. So all the union members, the president of the union and the management, and we have signed on that. It depends on that also, no? How much the employees will absorb.
Understood. Yeah, understood, sir. Also, I understood your point being that you don't face much competition from banks or NBFCs because banks, for example, they can't give a interest-free loan, and the NBFCs also they don't target these small niche areas. I just wanted to understand our competitive advantage with respect to fintechs, for example.
So for
Is
this,
there
understood. I didn't answer the question. I think the basic. So the two places where we enjoy the USP. One is the control of the entire supply chain. So in India, if you want to lend, so again, giving a salary advance is essentially a loan you're giving, right? So it falls under the lending guidelines of the Reserve Bank of India. And a fintech without an NBFC license cannot lend. So if you're not an NBFC, if you're not a bank, you cannot lend in India. So I think that's where a lot of fintechs struggle because they need lenders like us at the back end to manage the finances. And given how stringent the RBI has been recently, with the LSP guidelines and with NBFCs partnering with fintechs, uh, so I think the LSP partnerships have been on the fall lately. Secondly,
understood?
secondly, again, coming to the supply chain itself, so from distribution to technology to financing, the entire chain is owned by us. So that essentially allows us a lot of operating leverage. Due to this, let's say if I was to partner with a fintech for the same product, my rate of interest would be much higher than what I charge to my own clients because the entire supply chain is controlled by me.
Understood. So ultimately, does this translate into take rates, for example? So you take your take rates are between 1.5 to 2%. Correspondingly, if a fintech were to partner with a company, would they be upwards of 2%, 3%, for example?
Correct. So if they want to remain profitable, they'll be upwards of 2 to 3%. But if they are to give it at our rates, the fintech will be bearing a lot of losses. And
So
again,
Gurmeet,
that's not
our
sustainable
rate
in the
with
future.
Gurmeet, our rate with our RainPay was almost 3 to 4% now.
Yeah, Sanjay, it varied between 2.5 to 4, again,
And
depending
when we were
upon the risk matrix. Yeah.
when we tied up with RainPay.
Yeah.
Understood. One of my questions, I will come back later also. One of my final questions on this AWA vertical was that I typically understand that 80% of the companies that you typically sign up with are active at any given moment in time. I just wanted to know on a granular level, what percentage of employees of these companies who are active typically engage with us for loans. You give a employee
Between
number, also a loan number,
correct,
and
correct.
also an
Between
addendum to this.
yes, sorry.
Yeah, please go ahead. I'll just add the question later, addendum to this.
So on a portfolio level, we have seen an engagement of 12%, 12 to 13%
So
on
when
a
you
month
say
on a month.
12% of the entire employee base, typically that you could target, is
Correct,
that the number?
correct.
Okay.
So they basically on
So
a monthly basis withdraw from us. So if I have 15,000 employee base, so
uh
1,800 would be transacting with me at any given month.
understood. And are we seeing any increase in this number as time goes by?
So
Or
we
is the number
try. So when we started, the numbers was around 8, 9. Now it's up to 12, 13. I think it should stabilize anywhere between 15 to 17%. I mean, that's great
okay?
because with rain we had a engagement of 3%.
Understood. Also, in this con call, you mentioned certain countries like Indonesia, etc. What would be the typical percentage over there? This percentage over companies, over countries like Indonesia or maybe even US, wherein EWA is a very entrenched concept.
See, I
Again,
won't have any idea about that,
well,
but
let me take this, please. I've done some
yeah.
research on this. So again, with Indonesia and Philippines, we need to check the exact numbers. But with the US, so US market is typically very different from the Indian market. Very different. यूएस में क्या है ना, यूएस में दे हैव अ स्पेंडिंग कल्चर. उनको क्या होता है, इफ दे वर्क टुडे दे immediately withdraw the money and spend it. So again, in US, most of the companies where EY is active, they have bi-weekly wages. That is, wages are paid twice a month. Yet these
Mhm.
people require earned wage access because of their culture of spending. Whereas in India, it's more of a savings culture than spending culture. I think that there's a massive cultural difference, but we'll definitely look into Indonesia and Philippines engagement rates because they are very similar markets that to India.
True. So
But they
typically
have grown
our
very big, companies over they have grown really big. I was
yeah,
reading
yeah,
one in company Indonesia. There's almost 750 lakh 750,000 employees onboarded.
Yeah. It was a very
And
big number as compared to, and also India as a market is a much bigger market than
much,
Indonesia.
much,
So
much, much bigger, much,
denominator
much
also is
bigger.
higher for us. Yeah.
There's a huge
So,
scope,
sir,
Abhi to we have not even scratched the surface. There's a
yeah,
huge,
I
huge
think
scope.
I think for us, the personal loan, whoever goes for personal loan is a typical, customer for us, who would be getting better, product by going to EWA. Should be that is my understanding correct?
Again, this is very subjective. So now, if a person going for a 5 lakh personal loan
Mm-hmm.
versus someone
True,
going for
true.
a 20,000 EVA, the use case is very different. Because a person
True.
going for a
Understood.
5 LPL would either be going for asset creation one, or
Yeah.
and the tenor would be much higher. The tenor would be at least 12 months, 24 months. Whereas someone going for a 20,000 EWA is primarily either they have an emergency to meet, or they're doing for a better cash flow management. So what happens
Okay.
is that a lot of fixed expenses, if you see EMI, rent, they're typically paid on the second or the third of the month, whereas salaries are paid on the 7th or the 10th of the month to most of the companies we've partnered with. So what happens is here, तो अभी कोई किसी को सेकंड को ईएमआई देना है, बैंक में पैसा नहीं है, सैलरी 7th को आनी है, तो उसका ईएमआई बाउंस हो जाएगा और या फिर उसको अपना रेंट डिले करना पड़ेगा. So what people do here is they withdraw on the 30th or 31st of the last month. They withdraw half of the
Okay.
salary at least to meet their cash flow expenses immediately.
Understood.
So what happens here
Understood.
is
And
now, so अभी जिसको भी PL चाहिए, so now what happens is we have a 15,000 का salary database. Now in this we pick out, okay, that if you want a PL, you can come to us. You want a home loan, you can come to us. So we become a one-stop solution for all their financing needs, not only EVA but other financial necessaries as well.
yeah, the cross-selling opportunities you mean.
Absolutely.
Yeah. Also, Talan, one last question I had on the EWA front is, since the market penetration itself is low, are there any, once you sign up with a company, are there any programs that you undertake to, create more awareness? And do you
Absolutely.
compel
Absolutely.
our employees to download the app so that the engagement increases?
Absolutely. Absolutely.
Do you do something like that?
Absolutely. I mean, it's very important to make employees aware. One of the program itself. Second, its benefits.
Okay,
So in
understood.
collaboration with the company, we do host a lot of joint meetings, presentations, whatever the company requires to increase engagement, to make them aware of the utilities of us and the product.
Understood. And
So we have a
finally,
telecalling
coming
team
to
also, a telecalling team calls all the employees. But we have to take
yes.
prior permission from the company. Some of the companies say they don't do telecalling them, just send them messages.
Mhm. Okay.
Otherwise, we have a telecalling setup where we call all the employees, but that is we have to take prior approval from the. Some of the companies don't give that approval.
Understood. Understood. Yeah. So, sir, Sanjay, sir, coming to the last vertical that you have of SME and direct loans that you provide. So, sir,
Mhm.
I just wanted to know what is the typical customer profile and geography do we typically target Punjab, Haryana area? And I see that you have really increased your AUM. For example, in 2022 we were at 28 crores, and now it is at 73 crores as of FY25. So, what led to this growth? And also a corollary to this is we book on a 73 crore advance, we book a revenue of 13.5 crores. So, what is the conversion that is happening between these two? So, these two, three questions around this vertical.
We're growing very steadily. See, normally most of his portfolio is from North India, and almost entire portfolio is interlinked. It's either we know the client directly, we have funded him somewhere, or is a reference of an existing client base. See, other than one particular client, and the entire book is performing very well. Only one client, I think, will be restructuring. That's a small loan, 13 lakhs loan. We'll be restructuring that loan.
Okay, so these clients are mainly into what kind of businesses, or is it very varied? Does it?
90% of them business families.
Okay, okay. And so the typical size and the lending rate would be for these customers, what would it be?
Average size is about 30 lakhs, 30 to 40 lakhs,
30 to 40 lakhs, and the yields would be, sir?
around 18%. See,
Okay,
we
sir.
charge up to
And
24%. We charge up to 24%. On average, you can say around 18%.
okay, sir. So one more aspect was the 73 crore to 13.5 crore revenue that you booked. What is the, what is the basis for that? Just wanted to understand that aspect.
Basis for that in the sense.
So meaning on a 73 crore advance that you have as of FY25, I think you have booked a revenue of around 13.5 crores. I mean, the top line is 13.5 crores from this,
Yeah, that includes the
as per.
fee income also, no?
Okay, but okay, fine.
That is the interest as well as the fee income.
Okay, understood, sir. And one last aspect, sir, when we look at a 73 crore figure, and typically other financial companies give their NPA numbers in percentages. But we are one of the finance companies very unique that I found that we give numbers on an absolute basis because the numbers are so low. So
Yeah, we have
just wanted to understand your.
two clients
Yeah,
currently
yeah.
in
So
IVA and yeah.
yeah, so sir, just wanted to understand your risk and compliance practices that lead to such low NPA numbers, and how are we able to manage it, and how will we going ahead, how will we grow this book and manage the same? Just wanted to know your understanding on this.
Gurmeet will take that.
Yeah, Sanjay.
Yeah.
So I think there are two key verticals where we directly lend, and that's the EVA and then our personal loan and business loan. So the EVA product is an operationally savvy business with much less risk because the ownership of repayment actually rests with the employer. So in this particular vertical, employer assessment before onboarding them is the key for us. So, getting an employer who is stable, getting an employer who pays the salaries on time, where the working capital needs are met regularly, has a sizable population, less attrition, etc. So, our employer assessment is the key to this particular process. Secondly, making sure that the technology provides the experience seamless from dispersal to collection from the employer. So this is not a product which is where the risk is fundamentally going to be coming more from the employee because of the kind of arrangement that we have. They here the operational seamlessness, timely calculation of the limits, pausing and unpausing, based on our internal criteria. So there is no additional payout that happens, and collecting, on the due date from the employer is the key here. So EVA would continue to go with a lot of support from great employer assessment, coupled with technology that supports us to disburse and collect seamlessly. The second vertical that we have is of personal loan and business loan. This particular vertical is fundamentally governed in lines with the RBI requirement on KYC norms, KYC norm, and a great underwriting policy, coupled with various tools that are used to assess the customer independently. Uh, from financial assessment to using probe to look at all the key ratios over the last 5 years, doing extensive market checks, and coupled with risk-based pricing, this particular portfolio stands in good. It stands in good this thing. Now, given that there could be challenges which may come in customer repayment, which could be temporary or permanent. Apart from the assessment, we also have got a robust collection arrangement with the collection agencies, which provide support pan India, coupled with internal mechanism of proactive reminders to the customers to repay on time. So from a product designing, pricing designing, and from the credit assessment of the customer, coupled with the post dispersal proactive reminders to the customers to pay, this particular portfolio kinds of holds steady. As we grow and as we add diverse customers, we would again relook at various policy and portfolio parameters and make adjustments accordingly. We have an ability to look at the risk extremely proactively and kind of take measures appropriately.
Understood, ma'am. So the typical factors that you consider necessary for these low NPA numbers, I think, are a industry-wide practice, like for example, financial assessment. So I just wanted to understand that USP that leads us to such low numbers and also the outlook going forward. So now a 73 crore book would be typically growing at some percentage. And how would we like to manage these risk aspects? So
Uh,
that was my
that is exactly what I told you. I mean, we are into financial business, and we would inherently take some risk. If you need to also grow your book, we would also take constant risk, and we will bake those numbers also into our balance sheet. Now, in order to make sure that we do not kind of over exceed the risk numbers that we plan on this, they would be definitely a lot of focus around the selection of the customer. I mean, what kind of a customer is getting sourced, and second, robustness of our credit assessment system, where multiple factors around building, working on our internal scorecard, coupled with bureau information, coupled with information from external sources, all will be baked in to have a risk-based scoring for the customer moving forward. So, these are very dynamic things to address your question. We look at what kind of portfolio we want to acquire, what kind of risk numbers we want to manage, and that will fundamentally define, what kind of risk policies and the sourcing criteria we use.
understood, ma'am. So I'll come back later. Over to you, Nitin. And
Yeah,
take it.
thank you, Ganesh.
Thank you so much.
So we'll take the questions from the chat window. So I believe the questions which has been raised by Anuj regarding the biggest competitor and differentiator have already been answered. So I will take a question from Aryan Rana. So the considering the growth trajectory which is there right now, can you share the future growth trajectory for EWA product which you are having, Sanjay sir? And is there any? So you have already given the guidelines related to number of corporates which are already onboarded, right? Which are 90 as per the Q1 FY26 con call. How you are targeting the 250 plus by the year end? So can you just give us a brief on that?
So let me take this. Thanks.
Yeah.
Yeah.
So firstly, I think as per the Q2 con call, we've already stated the number that now we have 145 corporates as per Q2 FY26. So we actually added 55 in the second quarter of this year. So I think coming to the guidance for 250, we should be well within target range by the end of this financial year. Going forward, the idea is to keep adding close to 150 200 corporates every year uh, till we touch about 1,000 1,500 corporates. So the idea here is that the larger our entire employee pool gets, one, the more engagement we get with EVA. So that's one, a revenue maker for us. Second, we get more cross sell opportunities since the base is a lot larger. On the cross sell, essentially, is where we book a lot of profits.
Okay, okay. So, one question from my side is, Mr. Can you provide some breakup regarding the region-wise AWA or the corporates which are onboarding? So, Mr. Sanjay mentioned that mainly it is a north-based, right? So, is there any target region which is there? Like from north, you will be looking at west region or east region, something like that.
So the idea is where our DSA base is to first expand to those regions. So I think our DSA base sits in about 100 cities. So the idea is to first expand to that region. One, because we already know the geographies well. Second, we have people there in case they need to meet the corporate, they need to give a sales pitch. I mean, it's operationally more streamlined for us. So first, the idea would be to expand to these regions, uh, plus all the tier one cities. Then we can start, depending on the performance, the engagement, the risk, we can start looking at other geographies, the south, the east. That call will be taken in another year and a half.
So currently we have our own teams in Mumbai, Delhi, and Chandigarh. So from Chandigarh we're controlling a lot of areas in the North India. Plus we have our own team in Mumbai and Delhi. Major sourcing is coming from these three places right now.
Okay, okay, got
But
it.
we have onboarded companies right from up to Pune, Calcutta.
Got it.
And
Got it.
Hyderabad also, two companies and 3 companies in Hyderabad
Sure,
also.
sure, sure. I think they get the point.
Yeah, so it will be good if you can keep the region wise breakup in in your corporate presentation, or which is hosted on quarterly basis. So it will be
Sure,
give a
sure,
brief idea to investors as well how is the region wise growth. So that is a
sure,
suggestion from
sure,
our side.
sure.
Okay.
We'll note it down.
So
Yeah.
yeah. The next question is from Anuj, which is respect to the SME loans, which has already been answered. But my take is, Mr. Why to diversify into SME? Means already if you are having a product which is EWA, which
Mhm.
can have a lower NPA or nil NPA, right? So why to diverge into the other areas, risky areas like SME loans? So
No,
can you
I
give
think
some
sure.
yeah.
I think you got it the other way around. So we started SME in 2015. That's where the entire book is. We started even in 2023, 2022, 3. So it's the other way around. So SME is the main where the book sits. EY is essentially assisting SME in getting clients. See, because
Okay.
EVA may my book is not created. My book creates, it gets burned the entire next month because it's a 1 month tenor. But whereas in SME, the average tenor is 2 to 3 years. So that's where essentially the book is being created.
Okay, so as you are saying that, so you target SME loans first, and then the corporates which are getting onboarded, so you onboard the EWA book as well. That's what you mean to say?
So what I mean to say is essentially that SME has always been there. SME is from what we started the NBFC itself. So SME is essentially the foundation for the entire company. That's where the cash flow comes to fund
Mhm.
EVA. So EVA is essentially the new entrant into the entire product mix. So SME, the idea here is that SME will keep growing. EVA will just act as a customer acquisition tool for SME and other loans.
See, there's no shortage of funds with us. We are well funded. So both the books, if you're performing well, we'll continue to grow both the books, both EVA as well as business loans. I mean, we don't have to, squash on one to grow the other one.
Okay, okay, got it. So can you just provide a breakup of the corporates which are getting onboarded for EVA? Are these SMEs or mid-sized companies, or these are large corporates? So do you have some percentage in terms of that, if you can provide?
So they're primarily between SMEs and mid-sized companies. So having employee count less than 2,000, 1,000, 2,000, anywhere between that, and smaller than that. Again, the psychology, the rationale behind this is one, the sales cycle is much faster. So if I have to, let's say, onboard a 10,000 employee company versus onboarding 10 1,000 employee companies, it'll be much faster for me to onboard the 10 1,000 employed companies. One, second, my risk is much more diversified.
So
Okay,
Nityanand, we have limit per employee basis limit. We have a limit per corporate also.
hmm.
There are number of corporates who are demanding higher limits. We squash them. Let's say 20 lakhs, 10 lakhs, 15 lakhs. We don't allow more than disbursement than that. The system automatically bars this thing funding up beyond that. It's not
Okay,
that there's some corporate requires 50 lakhs or 1 crore of limit for their employees. We'll sanction the entire 1 crore. We'll just cap it at 20 lakhs or 25 lakhs.
okay, okay, got it,
So
got it.
in one particular corporate in Mumbai, we are in touch with them. They're almost asking for 2 crore limit. So we are just talking to them and max what they have told them, we can give you up to 50 lakhs only.
Got it.
So that our risk per corporate is also diversified.
Okay. So, is there any? So, there is a question from Mr. Shubham Agrawal. So, is there any salary range which is there for the EWA participants or the employees which are there? I'm not sure if you have already answered that. So, if you can answer that, please.
So there is no such minimum salary. I think the minimum salary is the person must be earning 18 to 19,000, whatever the minimum wage laws state for the respective state. But we see that our majority of active transacting customers earn between 50 and 70,000 a month.
Okay, got it.
It is 1 lakh. We don't fund him, even if the salary, let's say 5 lakh or 10 lakhs, max
Hmm.
amount we give to individual employee is 1 lakh.
Okay, got it.
You know,
So
then there's a per employee cap also. and there's a per corporate cap also.
Sure. They've understood. Thank you.
Yeah. The next question is from Mr. Ghosh. So is there any or what is the criteria you're keeping while selecting these employers, right? Means how you target these employers and how you select those for as a deciding criteria. So if you can give us those guidelines which you are considering.
So the basic, we can just give you a basic overview. One, the company needs to be at least 3 years old. Second, the company needs to be profitable. Third, we check the civil profile of the company itself. They should not have any trade line defaults or no DVDs in the past 12 months and no write-offs or settlements. So basically, the credit profile of the company needs to be good. ये ना हो ना कि
Pl-
हमसे salaries fund करवा दें and then they don't give us the money back.
Yeah, got it, got it.
And plus, we look at the employee. One of major thing is employee turnover. So we have rejected number of companies where the turnover of employees was very high. Rejected those even if their financials were very good.
So you mean to say the churn or the retention period
Churn of
of
the
employee?
The
employee.
attrition
So
rate.
Yeah.
attrition
Okay,
rate. No, we
got it.
don't normally fund this hotel industry because the churn is very fast over there.
Hmm. Okay.
Couple
So
of
in case So
yeah.
in case if the if a suppose for we will take a hypothetical scenario that the employee is there and he's there for 1 year, and then you give a loan to him, and then he leaves the organization. So how that money is recovered in that case from that employee?
So in majority of the cases, what we give is essentially 50% of the accrued salary. So this entire program is capped at that. So let's say if someone's worked for 10 days in a month, the maximum they can withdraw is 5 days worth of salary. So let's say if someone's to withdraw on the 11th and it's gone, not show up for work. In that case, there's still a settlement or full and final with the employer, which they're liable to pay the employee. So they deduct our advance from that and pay us.
Okay, got it. The next question is from Mr. Anuj. Yeah, is there any tie-up which we have already done with HRMS players for EWA for onboarding the corporates?
So a lot of corporates do use HRMS platforms, and we do integrate with the respective platform for seamless data integrations within our systems and their systems. We need to check the exact names of these HRMS platforms. We've integrated with.
Okay. The next question is again from Anuj. What is the percentage of sub DSAs are active amongst the ones registered with us?
For which product?
I believe it is for EWA only. He has not highlighted it specifically.
So we
We
are
need
in touch with almost all of them, but that keeps on changing every month. Sometimes somebody gets but we more or less, regular basis, we're in touch with all of them. Some are, we are divided in category A and category B. Category A, so we are in very, very regular touch. And category B, sometimes gives us cases, we are in touch with them off and on. But at least
Okay.
once or twice a month, we touch base with all of them.
Okay. So the next question is from Anuj again. What we can see is our growth has moderated a bit. Okay, so what will be the growth drivers for us going forward? Means, what are the plans?
So again, one why the growth has moderated is one the base has gone up. I think the entire balance sheet, including P&L balance sheet, everything's doubled since the last financial between 24 and 25. And again, in the half year itself, it's we've already achieved more than 50% of what we did last year. So the base is constantly going up. Second, the drivers would be one, increasing our corporate partnerships and employee base subsequently. Because since this financial year, we started cross-selling all sorts of loans to our entire EVA data pool, so that when we cross-sell anything either from our own balance sheet or through Shop Bank, the entire revenue gets booked as a profit. Because in that we don't have to give any DSA their fees or commission payout. One second is the technology optimization. As ma'am mentioned, that we rely heavily on external data points, external data feeds, all coming seamlessly through our technological infrastructures. which give us a very concise and overview, of whom to we are lending to. I think these technological parameters are really great at evaluation. I think,
So we
and
don't want
again,
to take see. It's a very see. We'll appreciate the economy and it considers overall situation. We have to be very careful in while lending. So just want to sake of numbers, we don't want to lend in the market. We want to make very very prudent decisions on this regard. Numbers बढ़ाना हो, I've said in earlier call calls also, बढ़ाना top line बढ़ाना बहुत मुश्किल काम है. It's a very easy job into an
Yeah.
NBFC. Main name of the game is the collection. It's not the disbursement, it's rather the collection. You should be very careful. You should be 100% sure that when you're lending to someone, that you're able to collect money from there. पर इतना करने के बावजूद भी ना फिर भी कभी-कभी दिक्कत आ जाता है बीच में.
Yeah, that's it. So then the next question is from Mr. Vamsi. So he's asking, do you also cater to the gig workers which are from Swiggy or Big Basket or from Zomato? Are you giving loans through EWA to these workers as well, or still not seen this market?
so we need to partner with it again. We need to partner with the respective company. We are open to this market. Given a few guardrails, we need to additionally set up in our given product setup. But we're definitely open to funding this market as well.
Okay. The next question is from Mr. Ketan. On the balance sheet front, there are no fixed assets as such. So all the technology spends done are getting expensed. And generally, how
We
much
are,
is the
we are
annual
expensing
expense?
that. We
Yeah.
are
And
yeah.
what is the spend on the technology? If you can highlight the number.
Spend on technology in the sense and monthly fees.
No, no.
What we
So
pay to
the tech platform or the tech stack which you have created, right? The software which you have built. So is there any ongoing development which is going on in that specific platform? And if it is there,
Correct.
then what is the spend on
So
that? That's the question.
I mean, so we have a technology team which not only works on EVA but on digitizing the entire all the product portfolio of Emerald, including business loan, our mobile app, EVA. I mean, they cumulatively work on all projects together. I think
the tech team is already working, I think, on 4 projects currently, no?
correct. So I think we can't just point them to
Everything is
that. That'd
expensed
be
on
just
a
only
quarterly
for
basis.
work.
Everything is
Yeah,
expensed on,
So
debit to
yeah,
the P&L on a monthly basis.
yeah. So it is the employee expenses only, right? That's what
correct.
it will be, right? Yeah. Okay.
Yeah.
The next question is from Mr. Ghosh. So is there any sectoral cap which you keep on the total loan book? That for an example, for textile sector, this should not be more than whatever 5%,
As of date, we
10%
have don't have any such. There are certain no-go areas, but as such, we don't have any sectoral like this.
Okay. Okay. So you have kept a criteria as such that you will not lend or you will not give loans to SMEs or EWAs in certain sectors as well. That's what you
I
mentioned,
can I
right?
can I just add that here,
Yeah.
Sanjay? Yeah. So as per the policy, we do have certain no-go industries, and at the same time, we also have some restricted industries. So the no-go is where we say that we will not do this particular relationship or we will not lend to this particular sector. And where it is restricted, we look at the restriction in terms of additional credit checks coupled with restriction on the loan amount, and looking at slightly higher IRR that we may charge for them, and kind of restrict the term of that particular loan. So, given that the book size is not really huge and we do not have a very big portfolio for segregation to look at which particular, so in our current portfolio, given that we have very, very little loss, the sectors that we have lent to currently are performing well. So we do not see any concentration of any sector, even from the sectors that is open as of now.
So can you highlight those sectors which are no go and which are restricted if you are okay with that?
That
See,
is defined in our policy, and
Okay.
it could be dynamic. Some of them could be completely negative, like, for example, the brokerage firms and collection agencies, companies who are into the collection activities or into
Hmm.
the brokerage or into stock trading, etc.
Okay. Okay.
And the major and for EVA, one of the major criteria is the turnover of the employees. This is a fun of the first few questions we asked. How much is the employee churning?
Yeah. Okay. Got it.
So we have
Uh,
rejected, a couple of very good cases, in some decently sized companies where, the employee turnover was very high. We outright
hmm,
rejected them.
hmm. Okay. So mainly the attrition rate, right, in terms of
Yeah,
percentage.
attrition. Yeah,
Correct.
attrition. Then, and they should not be, like some gambling business or, what you would say, gambling or, any
Negative sectors.
negative
As per
sectors,
the policy.
speculative business.
Got it. Okay. So the next question is from Mr. Neeraj Punia. The early salary started in 2015. So the EWA started in 2015 and has reached an AUM of 4,500 crore. So how many years do you see it will take to reach a scale, or maybe 10,000 or 15,000 or 50,000? So do you have any aspiration number which you have in your mind to take this AUM to?
Okay, so one question here. So the 4,500 crores, is that the EVA book or the entire book? Because I know for a fact that early salary, almost 90% of early salary books personal loans in their own books. So is the 4,500 their EVA book or their entire book? So what is their EVA book from that? We need that number.
Okay, I'm not sure. Neeraj has not mentioned highlighted that specifically. But is there any aspirational number which you are having, which you have kept for yourself? Maybe
So
by
the idea is
2030.
by 28, 29, EVA should be doing at least 30 to 40 crores per month in disbursements.
Hmm.
This will enable us to do close to 5 to 6 CR in cross sell alone revenue. Like 5 to 6
Okay.
CR in revenue cross sell once we touch that kind of EVA numbers given our entire employee base.
Okay. Okay.
So
The
again, our
immediate target is to, tie up with 250 companies. And, we keep on, for this, we have to take a short-term target, so tie up with 200, that is what we are right now focused on.
Okay. Got it.
And we are constantly upgrading our technology. We may be coming out something new in technology terms shortly.
Yeah. The next question is from Mr. Ghosh. Do you have any data on how many hits Shub Bank website gets on a monthly basis?
we need to check that. That's with our analytics team. We just contact them and ask.
So one of the question is from again from Neeraj Punmia. So as per the records, the Early Salary Services Private Limited, it's now branded as Five. So it has
Correct.
a recorded number of 5012, 500 to 1,000 employees according to a listing page. Earlier in Feb 22, 426 employees were there, and Emerald Finance has 26 employees as per recent company profiles. So how can you grow with us with such a small team? So that is the
No, with that, there's
question.
some, 40 people in all the subsidiary also, no?
Correct. So essentially, a lot of our employees are nested within one another. So we have a lot of
Means
subsidiary companies below
okay,
Emerald. So
okay,
again, the total combined strength of a full-time employees would come to about 50, 60.
mm,
Secondly, use of technology. We use technology to literally do everything, almost everything. So what a normal company would require 10 people to onboard a client, we require one or two. Again, our entire stacks are technology run, and we are optimizing that technology throughout the entire company now. In fact, all our just to give an example, so all the withdrawals that happen on EVA are real time. So it's completely API based from end to end, from our loan origination system to management system to the bank. It's all API driven. So the transaction takes hardly 10 seconds after the request is made by the employee. So that's just an example of the kind of technological innovations we've been doing within the company, and that's the focus to again to streamline as much as we can through operational and technological leverage, and keep the balance sheet as asset light as possible.
Can I also add one more thing, Talin, here?
Sure, ma'am, please.
I think one of the strategic thought process also is that as a company, we would like to kind of own and do in-house things which we feel is our core competency and is completely related to how we grow our business. All the other things which are kind of not our core competency, we will also outsource and kind of have the experts who are not on our roles to support us in those particular initiatives. Am I right, Talin?
Absolutely, ma'am.
So,
Absolutely.
so this keeps us, we are able to outsource some of the work to the experts who are the right people to be associated with, and at the same time keep our own books kind of asset light, and also get the work done, in a timely and on a precision, in a precise manner.
And Gurmeet, there's a more case of optimum utilization of employees also. Now, like only 7 employees have done 50 crore or plus gold loan business. That's one of the most highest efficiency I think we can find in the industry.
That's true. I
Absolutely.
mean, I think we can build in. Now, what happens is that, having been in this industry for 32 years, uh, over a period of time, the technology has really, really kind of, you can really leverage technology to optimize your performance, your risk, and also your operational expenses. Now, some of the companies who still carry the legacy systems, and if there are a lot of breaks in that particular system, and the challenges to kind of transfer or to imbibe the new technologies exist with legacy systems, and that is where you may also find that these particular companies are slightly more headcount heavy, to because it requires a lot of kind of connecting the dots also from different systems. So I think one of the key strategic decision which works in our favor is that when we kind of put our technical framework in place, we kind of envisaged, what should the end result be, and what are the key things that helps us do this in a very seamless manner. So this is one of the areas that I'm also very proud of, along with Talin and Sanjay, that slow and steady. We have not done any. We have been very, very strategic in identifying what are the different possibilities that we may like to integrate into the system. So it should be light, it should be modular, and it should be easy to configure. So that is the advantage that we carry.
Okay, thank you, Gurmeet. I believe Ganesh has more questions. Over to you, Ganesh.
Yeah. So one of the questions was on this. It dovetails with the previous answer that you have given in the con calls as well. I understand that the top line can be grown at any point in time for a financial company. It is the collections that matter. But at the same time, sir, we have a lot of equity in our books, and the target debt to equity that you have told in the con calls as well as maximum one that you have told that you are comfortable with. And
Yeah.
given the incremental cash flows that we generate, the cash flow numbers are quite big because we give our loans and it typically comes back within 15 to 20 days or maximum 1 month. So
So
given
Eva,
these
in
nature,
Eva, in
given
Eva.
this, yeah, in EVA, yeah. So given this incremental cash flow situation being so good, and I think what can be the run rate to actually utilize the capital base, equity capital base that we have uh, to optimum extent, so that our ROE numbers reflect the kind of strength that our company inherently possesses.
Hmm.
So that would be my first question.
So what I understand correctly, what you're saying is, we can borrow uh, money from other lenders. We are definite, and NBFC can borrow up to 7 times of its net worth. So current borrowing is just 14 crores. So we are continuously, whenever the funds are not required, we are borrowing from the markets, and slowly and steadily expanding the business. से हम लोग
So I
अनड्यू
think
रिस्क लेना चाहते हैं डिसबर्समेंट डिसबर्समेंट करना मुश्किल नहीं है, हम लोग अनड्यू रिस्क नहीं लेना चाहते हैं.
Let me just rephrase what Sanjay is saying. We do have a systematic growth plan, and we are following that particular plan. And our funding requirement, whether it's equity or whether it is through loan, is completely dependent upon that particular plan that we have kept for the year and for the next 3 years. So the top line is going to grow, and it is not that we are not going to be growing the top line, but there is a systematic plan to that particular growth.
additionally, coming to your return on equity question, so as the company levels up, so currently our debt to equity ratio sits at about 20%. So as we lever up, our return on equity will go up again because our incremental return on the debt is much higher than the cost of debt itself.
True, I get that point. So my question was, typically you need not even take a lot of debt to grow your top line. That is the nature of your business, that it is cash flow generating. It turns
You
around
need
so
not take too much
quickly.
of that. You're absolutely right.
Yeah.
You're absolutely right.
And as you said, sir, Sanjay sir, you told that you can go up to 7 times, and now we are at 0.2 times. And
Yeah.
we are targeting at best case scenario also, we are targeting only 100%. That is 1 times
Correct.
debt to equity.
Correct.
We can
So,
always go
so
beyond. We
given
can
the
always go beyond that. But let is अभी तो उतना भी उठाए ना, अभी तो बहुत नीचे हैं, अभी तो just at 0.2
बिल्कुल
right
बिल्कुल
now.
सर, टोटली अंडरस्टैंड सर. सो अभी हम लोग 0.2 में हैं, तभी हम लोग वी आर रीचिंग 15% ROE. तो ठीक है, I understand that when you take on more debt, the interest cost will come up, but the ROE number is on a typical basis, we are capable of doing much higher ROEs than our current.
Correct.
Yeah.
So that would depend on how we are able to grow our top line, given adequate risk.
Correct.
We need to ensure that because top line तो कोई भी financial company बढ़ा सकती है. That's not an issue at all. So I wanted to understand your outlook कि कैसे इसको मतलब थोड़ा सा rate कैसे बढ़ा सकते हैं. So can I just approach this question
working on
in a
that.
different way?
Yeah.
I'll just approach this question in a different way. So your growth targets on EWA and the cross sell opportunities are quite clear in your con calls. What is your growth targets for your SME loans, and what is your growth target with respect to acquiring more DSAs? Can I know that aspect?
See,
Maybe that will
SME
lead
ना हम लोग
me to the
organically grow कर रहे हैं. उसमें 25-30 lakhs आज की डेट में देना ना, you have to be very careful. On we are taking a risk. HNI or a big corporate. So we have a quite stringent criteria for doing that. In fact, not only us, all the major lenders right now are quite what should say, quite prudent on बहुत सोच समझ के दे रहे हैं पैसा.
Okay, so we don't have any internal targets per se to grow our book. For example, we have 75 crore.
That we have, that we have internal targets.
Okay,
हम लोगों ने
and with
बनाया हुआ
respect to
year-end में,
DSA
वो तो
acquisition.
that we have quarterly and annual targets. We all have that in place.
Okay, but you're not comfortable sharing it, I guess, now.
See, we can't. Just the public information.
Correct.
We cannot share that. We cannot share with
Understood. Totally understand, sir. And is there any similar target for acquiring more DSAs, for example?
That we do on a continuous basis. That is a continuous process.
That also happens organically. Yeah.
Yeah. That also happens organically. Yeah. That is a continuous process.
And sir, approaching this question another way is, by when do you assume or target the debt to equity to reach 1? Would be my question to understand the projection
that would be
or
difficult
the
to say.
target.
That would be difficult to say. I cannot comment on that right now.
Okay. A typical ballpark figures are say 2-3 years, 5 years.
At least 3 to 4 years.
To that, but
at least 3 to 4 years, given that we don't increase our equity.
Understood, sir. And sir,
see, as and when the funds are required, funds is not available to funds is not an issue. As and when we require, we'll borrow from the market.
Understood, sir.
It doesn't make sense now. We borrow 10 crores and there's no immediate utilization. Then we have to, that entire interest will hit our balance sheet. So as and when funds are required, that's a continuous process. We have a separate team for that, and they, we tell them and they manage the funds.
Understood, sir. I mean, any fund taking fund for you won't be a problem at all, I presume, because you are
not at all. Even in this kind,
you have such a good book that any company would be willing to lend to
yeah,
you.
yeah, yeah.
So
And you
I don't think so that would be a problem.
and you're touch wood, you know, unblemished track record. You know, since we have a zero check bouncing record from the day we got NBFC license, even prior to that also, an absolute
Yeah,
unblemished track record with all the lenders.
understood, sir. And coming to these subsidiaries, sir, you have Eclat as the subsidiary under which Shubh Bank is housed, right?
Yeah,
Is my
yeah,
understanding correct? And that is
Correct.
yes, sir.
100% owned by Emerald?
83%.
81.
81%.
Yeah.
Okay. And the rest of the holding is with the promoters themselves, the 19%?
No, 12% is with the promoters and the 7% is outside. This is
Okay,
with
sir.
HNIs.
Okay. Sir, I just wanted to know what is the nature of the business that we have with Eclat Capital and Reliable Capital. So what is the nature of business of Emerald with these two entities?
See, Reliable is the proprietorship firm and Eclat is a subsidiary.
So there is one more Eclat, right? One is Eclat Net
Yes,
Advisors, which I think.
that company is the old. Actually, when we started operations in '95, now we floated that Eclat Capital Finance Limited. That's an old company.
Okay. So what is the
Are
nature
you
of
talking about
business
Eclat
that we
Capital
have
Finance
with?
Limited? My
Yeah,
mistake.
I am talking about that particular company, sir, and
Yeah.
Reliable Capital. What is the nature of business that we have with these two companies, sir? Can you please elaborate on that aspect?
No, these are owned by promoters. Eclat Capital Finance
Okay.
Limited and Reliable. Reliable is a
Okay.
proprietorship and that's a limited company. That was the company which we floated in 1995.
Okay. No, we have taken RPT approvals for up to 15 crores, right, on with respect to these two companies. So we envisage some kind of
RPT
fund
is,
movement between.
yeah. See,
I
RPT we
get
have
it
to.
that it is a provisions that you have taken. It's an enabling provision. I understand that. But I just wanted to understand what under what scenarios do you look to utilize this fund approvals that you have taken? So what kind of particular you can give me an example so that I understand the nature of business transaction between these two companies. That's all
See,
my point was. Yeah.
normally what happens is, when we are doing gold loans now, तो we acted as a, like किसी का let's say मथुर या मन्नापुरम में गोल्ड लोन पड़ा हुआ है वो 24% पे चल रहा है and we want to transfer that to HDFC will fund at 12%. So for 2-3 days we have to give certain money to the this thing. We give money to Muthoot from Reliable or from Equity Finance Limited. वो gold वहां से release करा के फिर HDFC में देते हैं. So Emerald cannot do that kind of business. That short 1 or 2 day funding. So normally we transact through these companies. That kind of we transfer funds from that company to from Reliable. Emerald to Reliable or Eclat. And Eclat वो funding कर देता है 2 day funding कर देते हैं and then once the money comes back, we give the money back to the Emerald.
Okay, sir. So this
It's
enabling
a
provision
short-term
that you have
funding.
taken is
Basically, we draw money just for doing short-term funding for gold loans. There are a lot of takeover
for gold
cases.
loans only.
Yeah.
Okay,
See, what
understood.
happens is HDFC और ICICI gives us cases, किसी उनके पास कोई क्लाइंट चलकर आता है कि उसका 5 लाख का गोल्ड मथुट में या मन्नापुरम में पड़ा हुआ है, वो केस ट्रांसफर करना है HDFC में. HDFC cannot give money directly to Muthoot or Manappuram. So they route it
Understood.
through us.
Understood.
We take that kind of 1 or 2 day
Sure.
risk.
They've
Emerald
understood.
cannot do this business directly.
Understood, sir. One more question I had on the SME front is that do we take repayments in installments or are they bullet payments, for example? Or
Both,
is it a
both,
mix of both? Okay,
both.
mix
It's
of
a
both.
both.
And understood, sir. And on the EWA front, is there any KPI that you track with respect to the cross-selling? And what could be the typical KPI that you aspire for?
Or the quantum of disbursed amount by our other lenders.
Okay, because the quantum itself couldn't be a good metric, right? Because the denominator itself is increasing at such a rapid pace. The quantum is bound to increase. But do you have any per employee or per company
Correct.
metric?
So that is in percentage, monthly percentage. So, for instance,
Okay,
if EVA is doing 6 crores a month in disbursement, the cross sell should at least do 10%, 10, 12%, whatever the KPI is. Well, I can't disclose the KPI.
Understood,
See,
understood.
we already
So
doing business loans to our existing, we have done a couple of business loans also to our existing EVA clients, जिनके साथ
understood,
अच्छे जो business चल रहा है उनको हमने कुछ दिया है. In fact, in one particular case, we have done top up also now.
understood,
We
sir.
gave them only for 4 months, then they repaid the entire one. Again, we have given them.
Understood. And sir, over the years, we have targeted various segments or professed interest to go into various segments. For example, we were talking about invoice discounting, etc. And it is commendable that we look for such areas to go into. How do we find out such areas to which we can typically go for, or where we have right to win? And what are the future opportunities or separate segments that you see? And
So we
obviously,
yeah.
I come back to this kind of question again and again because uh, we have a luxury that no other capital, finance company can have. That is, we have such a high, equity sitting on in our books, and which is why I'm looking for, answers to these kind of questions. Thank you.
So what kind of sectors we look into diversifying is that creates synergy. That essentially creates synergy with EVA with other businesses. So we primarily ourselves are an MSME lender. We have we have corporate DSA ship of literally every bank and NBFC for retail finance. So the idea here is to expand into these sectors only. So what happens is, let's say if I'm to give invoice discounting, that it enhances my product offering to a corporate when I go to them. That okay, if you want a business loan, we can get it done. You don't want a business loan, you want a short-term invoice discounting, we can get it done. Your employees want higher ticket personal loans, home loans, we can get it done. It just enhances our product offering. One, second, we've already underwritten the corporate while giving them EVA or SME. So this essentially reduces one my cost of acquisition, second my underwriting cost, thereby enhancing my margins. So
See,
we
Ganesh, you
essentially
are
Understood.
right. We have a lot of leeway with us, and all the three operation lines we are operating. There's huge scope in all the three products.
Understood, sir. Understood.
There's a huge
The,
scope in DSA business. There's a huge scope in business loans, and the huge scope in the EVA. तीनों लाइनों में और हमारे पास लीवे बहुत है अभी लाइक 80 करोड़ की इक्विटी में हमारे पास सिर्फ 14 करोड़ की डेट है एज ऑफ डेट एंड
exactly,
अनब्लेमिश ट्रैक रिकॉर्ड तो अभी लेंडर्स के
exactly.
साइड में अभी कोई ऐसा इश्यूज नहीं है इनफैक्ट अभी वी आर गोइंग फॉर रेटिंग अपग्रेड अगर रेटिंग अपग्रेड हमारा हो जाता है तो वी गेट lending from more banks also. Currently, we have
Understood,
double
sir.
B plus rating from CRISIL.
Understood. No, sir. The thing is, one of the positives that I see in our company is that we own the entire supply chain. We source
Correct.
the customers. Also, we have the capital to lend them. तो
Hmm.
मेरे हिसाब से सर मतलब मार्केट को भी यही दिखता है कि आरओई जब आपका एक फिगर क्रॉस कर जाता है देन द मार्केट आल्सो एंड द कंपनीज आल्सो विल द लेंडिंग कंपनीज टू यू आल्सो विल रिकॉग्नाइज द इनहेरेंट स्ट्रेंथ्स दैट यू possess.
True.
And one of the low hanging fruits in my opinion would be to take up the DSA का जो अच्छे customers है, the cream customers that you get from DSA,
Hmm.
and to lend them short term loans is one of the low hanging fruits that for us would be a natural fit in my opinion, similar to what you're looking for EWA. No, instead of cross selling and selling the customers to other people like HDFC, you can take them up in your own books.
And
So
Sanjay,
I would,
let me answer this question.
Yeah, sure.
I think this is part of our future progression as we strengthen our technology platform coupled with our risk policies. I think that is also going to be a natural progression to kind of add to grow our personal loan book by looking at some credible salaried customers and some more private limited companies.
yeah, understood, ma'am. So thank you for answering all the questions. We couldn't get these kind of questions through in the call. So over to you, Nityanand.
Yeah. Thanks, Ganesh. Sanjay sir, one last question from my side. I was just looking at the overall shareholding pattern, right? So what I could see is the few of the promoter members are selling their stake. If you can highlight is what are the reasons
No,
Um,
no,
uh,
none of the
so
promoter have
it's-
any services.
Sorry, correct.
Yeah.
So, sorry, Ms. Nityan, can you just highlight which promoter has holds stake in
what
them?
I can
No, no.
see
And
as per the shareholding pattern which we could see on the screener. So Ms. Anubha Agrawal, the promoter stake has come down from 24.95 to 22.11 in
so
last
just to
2 weeks.
again
Yep.
clarify this, so dilution has been because of issuance of primary shares. The entire
Hmm.
denominator has gone up, hence the numerator has gone down for these people. They've
Got
not
it.
sold the shares in the secondary market. More shares have been created overall.
Okay. Okay.
Yeah, 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 Nityanand ji, उन्होंने बेचा नहीं है. I think in the last cap table, some people have come in, right? Some good companies and
Correct.
with some.
Yeah.
Can
Got
you
it.
just speak? I mean, the last cap table, I think you raised it for, getting the equity base for NSE listing, I think. So
Yeah.
the
So we'll be eligible
and
for NSE listing on March 27 balance sheet.
Understood, understood. And can you just tell about the other people who have joined? I think in the last fundraising, the promoters have also participated, as well as
Yeah.
some marquee names have participated. Can you just
Yeah.
give a short brief about the people who have participated in the last fundraise?
See, though fund houses, Saint Global and Minerva Capital, Mauritius-based funds have joined. Mr. Rajesh Jain is there. He was head of KPMG India, and he was the founding partner of Grant Thornton in India. Mr. Vishnu Sultania, he was among the top 100 CFOs in India. I think I was heading Cadbury's in Russia, and he was heading in Israel's one big tech company. He's now consultant in Gurgaon to Fortune 500 companies in India. And I think he's a consultant to government of Haryana, UNO, and this government of Punjab also.
Got it. Got it. Okay.
Okay, sir. Thank you. Thank you.
Yeah, thank you, Sanju sir and Gurmeet and Talain for your time. We thank you for the overall questions by the investors and providing your precious time for explaining your business model. Thank you, team.
And can I make one
Thank
last
you.
request? Can I make one
Sure,
last
sure,
request? So
sure.
I think almost 30, 40 people will be here. Nitanji, they can have my telephone number from you. If they can source clients for us, like, we came in touch through Mr. Manish. Mr. Manish has already sourced 2 clients for us. अभी operations उनके साथ start होना है दोनों companies के साथ. If you can just source corporates all over India for us for EVA program, you can share my number with them, please.
Yeah, sure, definitely.
It'll
So,
be it'll be on it'll be on a professional fee basis.
uh,
We will pass on certain percentage of the revenue earned to them. You can just refer corporates all over the country to us, please.
yeah, yeah,
So a lot of our
definitely.
investors, become our sub DSs now.
Yeah,
At
okay,
least
okay.
seven, eight of our investors. In fact, Mr. Manish is also sourcing clients for us. Unfortunately, अभी
Mm-hmm.
दोनों भी start हुए नहीं है. हमने उनको onboard कर दिया है.
Mm.
Hopefully, they should start in a month or two. है तो नितिन जी और भी कुछ हो तो मेरे numbers kindly share कर दीजिएगा, please.
Sure. So
My or Talin's
we
number
have,
with them.
yeah.
Please.
We have your coordinates, sir.
Yeah,
So
please.
thanks for the same. So
Thank you very much.
we will
Thank you very
conclude the
much.
call. Thank you, team.
Thank you so
Bye.
much.
Thank you.
Bye
Bye.
bye.
Take care. Bye.